Imagine a multi-billion-dollar empire that doesn't actually own a single factory, doesn't employ a single assembly line worker, and doesn't even know the secret recipe to its own product. To the average consumer, Red Bull is a beverage company, but to the world of high finance and strategic business, it is something far more bizarre. It's a marketing firm that just happens to sell a drink. This is the story of how a company that produces absolutely nothing managed to conquer the globe, creating a brand so powerful that people are willing to pay 10 times the production cost for a liquid they could technically get elsewhere for pennies. The stakes couldn't be higher because Red Bull didn't just join the market. It invented a category that didn't exist, and it did so by breaking every traditional rule of manufacturing. While giants like Coca-Cola and Pepsi spent a century perfecting their supply chains and bottling plants, Red Bull's founder realized that in the modern world, the physical product is almost irrelevant compared to the story you tell about it. The journey begins in the early 80s with a man named Dietrich Mateschitz, a traveling salesman for a German toothpaste brand who found himself in Thailand, exhausted and suffering from jet lag. He discovered a local tonic called Krating Dang, a syrupy, non-carbonated drink used by Thai truck drivers and laborers to stay awake during long shifts. Most people would have just finished the drink and gone to sleep, but Mateschitz saw a gap in the Western market that no one else had noticed. However, the hurdle was massive. Western taste buds weren't used to the medicinal flavor, and the idea of a functional drink was alien. He didn't just need to sell a drink, he needed to sell a feeling. He spent 3 years tweaking the formula and the branding, eventually partnering with the Thai creators to launch Red Bull in Austria. But here is where the fake nature of the company takes root. Instead of building a plant to mix the ingredients and fill the cans, Mateschitz did something revolutionary for the time. He outsourced everything. He turned to a company called Rausch, which already had the infrastructure for canning juices. By doing this, Red Bull stayed asset-light. They didn't have to worry about machinery maintenance, labor unions in factories, or the rising costs of aluminum. They simply sent the orders, and Rausch sent the cans. This allowed every single cent of profit to be funneled back into the one thing Mateschitz cared about, the myth of the brand. When Red Bull first hit the European market, it was a disaster. It was too expensive, the taste was described as polarizing at best, and traditional retailers didn't know where to put it. Instead of retreating, the company leaned into the weirdness. They didn't run television commercials or buy billboards. Instead, they hired student brand managers to drive around in minis with giant cans strapped to the roof, handing out free samples at parties and sporting events. Most brilliantly, they allegedly began seeding empty cans in the trash bins of the trendiest nightclubs in London and Ibiza. When people saw the bins overflowing with Red Bull cans, they assumed it was the hottest drink in the world. This was the birth of the perceived demand strategy. By creating the illusion of popularity, they forced reality to catch up. They were selling a lifestyle of high energy, late nights, and extreme performance, all while the product itself was being quietly manufactured by a third party in the background. As the billions started rolling in, Red Bull didn't buy factories. They bought sports teams. They bought a Formula One team that was failing and turned it into a world champion. They bought soccer clubs across 3 continents. They started an incredible media house that produces world-class documentaries and photography. If you look at their balance sheet, they spend roughly 30% of their revenue on marketing, which is double or triple what a standard consumer goods company spends. This is because Red Bull is essentially a content creation machine. When Felix Baumgartner jumped from the edge of space in the Stratos mission, millions of people watched live. It looked like a scientific breakthrough, but it was actually the world's most expensive and successful long-form commercial. Not a single second of that broadcast mentioned the taste of the drink or the ingredients. They didn't have to. By associating the logo with the absolute limit of human potential, they ensured that every time a person picks up that slim blue and silver can, they feel like they are part of that elite world. This fake business model is actually a masterclass in risk management. By not owning the means of production, Red Bull is incredibly agile. If the world suddenly stopped drinking soda, they wouldn't have billion-dollar factories sitting idle. They would simply stop the contracts and pivot their marketing engine to something else. They have turned the traditional concept of a corporation on its head. In the old world, the product was the star, and the marketing supported it. In Red Bull's world, the marketing is the star, and the product is merely the souvenir you buy to support the brand. They realized early on that anyone can make a caffeinated beverage. The chemistry isn't a secret. What you can't replicate is the emotional connection. They sold the wings, not the liquid. This led to a level of brand loyalty that is almost religious. People don't just drink Red Bull. They wear the hats, they follow the athletes, and they watch the events. They have successfully commoditized adrenaline. The financial efficiency of this model is staggering. Because they don't have the overhead of manufacturing, their profit margins are astronomical. A single can cost roughly 10 to 15 cents to produce, including the ingredients and the packaging. By the time it reaches a premium nightclub or a high-end gas station, it can retail for anywhere from $3 to $6. That markup is what fuels the F1 cars and the stunt planes. It is a self-sustaining cycle where the marketing creates the premium price, and the premium price funds more marketing. This creates a barrier to entry that is almost impossible for competitors to overcome. A new energy drink company might have a better flavor or a lower price, but they don't have the lore. They don't have 20 years of history sponsoring the most dangerous stunts on Earth. Red Bull didn't just build a company, they built a culture. And they did it by realizing that in the information age, attention is the most valuable currency in the world. Critics often point out that the company is a house of cards, built entirely on image. They argue that if the cool factor ever fades, the company has no physical assets to fall back on. But that misses the point of what Red Bull has achieved. They have become a media conglomerate that uses a high-margin beverage as a way to monetize their audience. They are more similar to Disney or Netflix than they are to a soda company. While other brands are desperately trying to buy ad space on YouTube or Instagram, Red Bull is the one creating the content that people actually want to watch. They aren't interrupting the entertainment. They are the entertainment. This shift in perspective is why they continue to dominate despite hundreds of competitors entering the space with more traditional business models. In the end, the success of this fake company challenges everything we think we know about entrepreneurship. It proves that you don't need to be a specialist in manufacturing to lead an industry. You don't need to own the tools to build a masterpiece. By focusing entirely on the psychological value of their brand and outsourcing the physical reality of their product, Red Bull's founders became some of the wealthiest people on the planet. They understood that humans don't buy what you do, they buy why you do it. And as long as people want to feel adventurous, daring, and full of life, they will continue to pay a premium for a little silver can filled with a drink that the company itself didn't even make. It is a billion-dollar paradox that changed the face of global business forever, proving that sometimes the most successful way to be real is to be the most brilliant fake the world has ever seen. The genius was never in the can, it was always in the way they made us look at it. Red Bull doesn't just give you wings, it gives a masterclass in the power of perception over reality, showing that the greatest asset a company can own isn't a factory, but a permanent place in the consumer's imagination. As we move further into a service and brand-driven economy, more companies are trying to replicate this asset-light approach, but none have mastered the art of the empty company quite like the blue and silver giant. They prove that in the end, the brand isn't what you say about yourself, it's the story you convince the world to tell about you.